Good morning, everybody. How's everyone doing today? Hopefully, you've had a decent morning so far. We know today is Thursday, October 27th, and it's GDP day, right? We're getting our quarter-over-quarter estimates here, as you can see, at 8:30. Boom, right there, which is why we're live slightly earlier, 8:15. We talked about it yesterday. We gave you the warning in last night's video. We're live. We're here early. We're going to catch the live market reaction to whatever takes place with GDP. So with that being said, actually, I've got to do something like this just so we can see futures out of the corner of our eye. And we'll actually go to like a 5-minute chart here. Look at that. I was unprepared for this morning's reaction. Let's go like this. And we'll just put that sort of up here so we can see already some volatility coming in. It's 8:20. Big volume going through. I don't really know what's going on here. It might be a little bit deceiving because we're on the 5-minute chart, but this is not GDP yet. This is not the reaction just yet. We've got about 10 minutes to go until that should be coming out, unless something leaked. So anyways, advanced GDP, that's coming out at 8:30, 10 minutes. After that, durable goods and unemployment, the usual Thursday stuff. This shouldn't really move the needle too much in the wake, ultimately, of what's going on with GDP. So we'll see that live unfolding. Tomorrow, of course, another early stream because we've got core PCE coming out. So we'll be live again at 8:15. Come join us tomorrow morning for the live reaction to that one as well. These are kind of the two big deals, especially as we head into next week, which, as we know, is the big week when it's just everything boom, 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 packed Tuesday on, right? JOLTS, non-farm. We've got FOMC statement, Fed funds rate, and the conference. PMI here, hourly, the true non-farm, not the ADP version, right? And then the unemployment rate next Friday. So a stacked week next week. Really, really big week of economic data next week. And it all is going to sort of, I don't want to say be, this isn't going to foreshadow what's going to happen here, but this certainly will be a precursor to any particular move that can unfold. GDP and PCE, right? So big deals here, and we'll, of course, again, keep an eye in that upper right-hand corner. With that being said, let's see what we've got for stock-specific headlines here on CNBC. Meta plans to lose even more money building the metaverse while its ads and business shrink. So as we know, the Meta stock price absolutely got pummeled on the earnings announcement, right? I think it's trading close to 95. It's under 100, or at least it was. And it's just absolutely ugly chart. Something to stay far away from, noting that you'll get people this morning who want to jump in there and they want to buy Meta ultimately. Then you're going to get people who want to jump in there and who want to sell Meta if they already have a long position, right? So I don't think Meta will be a good trader given what's the severity of what's been going on this morning. So anyways, we'll take a look at the chart and we'll go step by step, but ultimately not a good look for Meta. McDonald's earnings beat as customers return despite higher prices. Comcast tops expectations as it squeezes out a small gain in the broadband subscribers. All right, so one really negative headline and two decent headlines, right? We know that McDonald's is a decent component for the S&Ps. And Comcast as well. It's obviously not as big as what's going on in Meta, but certainly nonetheless, big pieces. And would you look at that, as people are saying in the chat, the ECB came out with their 0.75 rate hike at 8:15, which is accounting for this volatility. And CNBC, right in fashion, threw that up at the top of the screen, a couple minutes late here. So thank you, CNBC, and thank you to the chat who was on top of it before CNBC. Do appreciate that very much. So ECB doing a rate hike is causing that volatility here, but ultimately continuing out through the headlines. What do we see here? Fanatics hires first chief people officer. S&P is near flat. The stock market. Okay, so this is interesting here, because I've seen tweet after tweet after tweet, comment after comment saying, why is the market not, gapping down 1 million points with Meta, right? This headline sums it up. The stock market is proving it may not have to rely on big tech as much to drive a comeback. Why? Let's think about this just for a second here. Why is that? Well, we've got the XLF. We've got the XLV. What do we know about both of those sectors? They're actually way outperforming the market. Way outperforming. So the S&P will be okay as long as these two sectors hang in there. The QQQ, on the other hand, the Qs, not so much. Not so much. The Qs are not as heavily weighted towards financials and healthcare. So still just an interesting relationship to be keeping an eye on. And I think I did a pretty decent job last night of explaining this kind of phenomenon, right? We looked at all the charts and we sort of showed you the data points that, hey, things are actually, more bullish than bearish. So anyways, continuing along through the headlines, Altria quarterly earnings miss as the revenue falls. Credit Suisse shares plunge 12% as they announce a huge third quarter loss and strategic overhaul. Makes sense. Shouldn't really be too much of a surprise there. Southwest says travel demand is still strong and says Boeing delays could continue into 2024. So throwing some shade at Boeing, but nonetheless boosting their own stock in doing so, right? Travel demand's still strong. Like, hey, we've got customers. Just get us the dang planes, would you? Yeah, I thought this was so funny. I thought this was just too funny. Elon Musk carried a literal sink into Twitter as the deal nears the close. And as he's walking in, if you watch the tweet, he says something like, just coming into the office, let that one sink in. Let that sink in, right? I don't know. The dude, he's just got a sense of humor like nobody else. What CEO out there is going to carry a literal sink into the office space to make an internet joke to say, let that sink in? To me, that's funny. I think that's funny. If you think it's immature, if you think it's a sign of a stupid CEO, then you've got your own opinion. I've got mine. But I mean, come on, that's funny. That's funny. Yes, GDP is at 830. Alisu. Yes, 8:30. 5 minutes to go. What else do we have here? Excuse me. Downgrade to Meta after the earnings miss. Says the higher spending will hurt the stock. Makes sense. Meta's kind of like going all in on this metaverse thing, which again, it's going to cost them a lot if they're going to build that out properly. What else here? Ford reveals the third quarter net loss, weighed down by supply chain issues and Argo AI investment. Powell again is facing political pressures. What else? Ford earnings beat again, even though it was a net loss. So beat, but net loss. What else here? Last chance. Okay, here we go. Friday, right? This is tomorrow. Is your last chance if you want to buy a Series I at 9.62, which is let me just be clear about this. This is a flexible rate that is subject to change. That is not locked and loaded for all of eternity. It is a flexible rate, but if you want one, your last day is tomorrow to lock in that rate for at least, I believe it's at least 6 months. 6 months. What else? What else? Kanye, no longer a billionaire after being dropped by Adidas. So he's no longer hanging out in the Billionaires Boys Club or whatever it's called. What else? I think that's kind of it from a stock-specific headline perspective. As we know, it's really just Meta, massive miss. Massive miss. And we've got McDonald's kind of on the upswing here, as well as Comcast and Ford, right? Comcast and Ford. So let's just look at the earnings calendar now. Looks like we missed. Let's go to the actual graphic. Where is it? Where's that graphic? I should just save these things, shouldn't I? But regardless, here it is. Yesterday after the close was your Meta and Ford. Before the open this morning, Shopify. I didn't see any headlines about Shopify. Maybe we look at that chart as well. But McDonald's, Caterpillar, Southwest, MasterCard, Merck, all this morning. And then big day after the close. The market is Apple. Apple is the market. And they are reporting after the close. So a really big deal. That's the main show. Everybody get out your popcorn. Everybody get prepared. Apple is the main show, right? It's the main show. It's what everybody came to see. And just like that, we've got our spam bot in the chat right on time. Let's go ahead and drop the ban hammer on this person. And then what we'll just do is throw it in subscribers only mode. So ban. And then we'll go subscribers only mode. Boom. Minimum subscribe time, any duration. Okay. So we got to do it. There's just no sense in letting spammers continue to be in the chat. So subscribers only mode. If you want to chat and you're not subscribed, all you've got to do is subscribe. Just press the button. You can unsubscribe after if you don't want to stay subscribed. There's no minimum time requirement on that subscription to start chatting. You can just press the button and immediately start talking if you'd prefer. So with that being said, we've been through the earnings calendar, we've been through the economic calendar, and we've got about a minute and a half to go until the GDP numbers come out here. So what we'll do is we'll just look at our ES futures, but we're not going to dive into too much detail. So I think starting on a high time frame like the 4-hour will be just fine. And then what we'll do is, about 30 seconds before the announcement, we'll drop it down to the 5-minute. So 4-hour structure, notice guys that we've still got, or we're building out this nice healthy break from balance here, right? Tuesday's breakout was really, really impressive. We talked about all this stuff in last night's video. If you didn't watch last night's video, please go back and watch last night's video. It has all the in-depth thoughts, all the breakdowns of what I think is supporting bullish evidence. But regardless, nice breakout, moved to the top, this zone right up here basically on yesterday's session, then rolled over quite hard off of it. And everybody's concerned about a possible pullback here. And I do think a pullback could be reasonable. But look at the levels we have underneath us. Even if the market pulls back, is it bearish? I would argue no. I would argue no. And we can see that clear as day here on the 4-hour time frame chart. I mean, we're above this prior set of highs. So a pullback that goes to here is like rainbows and butterflies. If we turn around off of it, we could still produce a higher low at this prior pivot right here. And worst case scenario, we move back down to the top of the box here, close to 3750. I don't know that that's in store just yet, but that would be something to watch out for. So 5 seconds to go. Let's go with a 5-minute chart here. And there we go. We are in the game for GDP estimates. Let's watch this chart here for a moment, and then we'll see what the number is afterwards. So far, hanging in there. It looks like, at least as of right now, there's been more volatility based on the ECB rate hike than there is. Volatility is. From the GDP. There we go, starting to get some lift here. Lift in the upward direction. So the volatility is coming in, but we're still very well contained in the overnight range. It's not like it's not like an inflation report. It's not like CPI from last time with big up, big down. It's pretty tame here with this release. So nothing crazy, just kind of hanging in there. Little pop to the upside, but at the midpoint of the overnight range. Just at the midpoint of the overnight range, right? There's your overnight range, kind of hanging out towards the midpoint, right around in here. So nothing all that impressive from GDP so far. Let's bring up the other screen. Let's move that off to the right so we can keep an eye on it. And let's see what we've got from a numbers perspective here. Let's give this a hard refresh. And we'll refresh all this stuff. So let's see what the numbers are. Advanced GDP, look at that. Boom, beat the expectation. That is, that is a bullish sign, no doubt about that, right? 2.6 versus 2.3, solid beat there. Solid beat there. The previous, remember, was a shrink. So really, really solid move out of advanced GDP. It beat the expectation, and obviously it's positive. So everybody's talking about recession this, recession that. Meta earnings are going to sink the market. Everything's going to hell in a handbasket. This would be, a decent contrary opinion to all of that. So GDP kind of all right here. When you look at the price index quarter over quarter, it did miss here, right? So this one versus this one. So slight miss on the index side, but the advance here is decent, right? Nice little beat, and to me, that's what the market appears to be responding to, right? What else? Core durable goods are down. Core durable goods are down. At least, okay. Let's look at this one for just a second. Core, oops, all over the place with my timer. I'm just trying to make sense of this stuff. So core is down here. Durable is up but missed. And then unemployment is kind of just beneath the expectation. Okay, so everything considered here, I think that what this means for the market is, the Fed can possibly raise rates 75 basis points again in December, right? Which to me is kind of a head scratcher because obviously the market's moving higher here on what would appear to be the good news, right? But as long as the economy is quote unquote fine and strong, and this would kind of be evidence for that, then the Fed can seem, then the Fed would be able to raise rates again and not really feel like they're impacting things too much. So again, a little bit of a head scratcher here between the implications for what the Fed might do versus what the numbers actually would suggest, that the economy's kind of recovering, there's no recession, and we're kind of like good from that perspective, right? The jobs market obviously being strong as well, coming in under expectation with the unemployment claims. So with a strong labor market and advanced GDP that's actually quite solid here, beating the forecast, again, to me, it would seem that that would be a green light for the Fed to continue to raise 75 basis points come December, right? It would seem like a green light, unless what's going to happen is the Fed says, we probably could raise 75 basis points. The market can obviously withstand it, but we don't need to anymore. Unless that's what the Fed kind of says next week. Obviously, we'll get that information on Wednesday. So just trying to think through it logically from a more fundamental perspective and Fed perspective. That's what I would kind of say about that, right? So you can see it's fading off now, which might make sense if we consider the 75 basis point rate hike that's now quote unquote allowed after something like this. But, overall, what happened on GDP from a price perspective, right? Let's just look at the chart here. Now that we know the numbers, we've sort of seen that it's better than expected. The economy is quote unquote fine, big quotes around that, quote unquote fine. Market's just kind of hovering sideways in the overnight range. It really didn't do anything all that impressive. No major gap up, no massive rally, and no massive plunge underneath the prior low of day. So all good here from the GDP perspective. I suppose we're through the fire and flames, and we're just kind of hanging on now, right in the midpoint. And I think, as I pointed out in last night's video, if you didn't watch last night's video, especially on a hold of the prior low of day, I think there are far more bullish data points than bearish data points in this market. All right, I truly believe that based on the structure. So let's go back up to the 4-hour, and we'll run through all of the structure momentarily here. But who's in the chat first? Let's see who's here. Scrolling all the way on up to the top, Raz is kicking us off with the sunshine emoji. Must have heard what I was saying yesterday about the rain. I do appreciate that, Raz. Thank you for brightening up the chat and being here first. After that, we've got Nick Farrell, Davey, Crypto Vader, Nick. We've got Ryan Speed, Small Good Decisions, Uzoma, Live Better, Mickey, Eric J Trades, Infinity. We've got New to Stock, Chloe, Applejack, amongst almost Davey J Trader, Lioness, Roger Tutt, M Spears, Lavona, Ramona. Back-to-back rhymes, nice. INF, the based homie, of course, out of Canada. We've got Jamie, Moodaman, Small Good Decisions, Random Factor, Jonathan Fitzgood, Derek, Johnny. We've got Todd A, Stevie J, Johnny Whitaker. We've got Rose, Stevie J. We've got Philip M, of course. Mona Makes More, Greg Rulo, good morning, sir. We've got Matthew McGregor, great name. Liam, Plant-Based Will, John Cardozo, Siege, G Money, J Trades. We're just going to be looking for green names now here. Pete and Repeat, of course, got to say that one. What else? Soldier Down, Joel Clark, M Spears, Scalp Daddy Dollars, Ty. We've got Buckminster Wallace, Applejack, Jay Cortina, Rug Pull. We've got Jay Hicks, good morning. Who else? Who else is here? Alex Dickinson, nice to see you. M-Power, G-Money. I think we're just calling out the homies again. Got everybody already. Headwing, good morning to you. And I think that's going to do it for shout-outs this morning. So thank you so much for everybody who tunes in. I do appreciate all of you. Again, if you want a shout-out and you don't have a green name, the earlier you get here, the earlier you say something, the more likely it is that I will say good morning to you. But with that being said, we're going to start moving into the analysis portion of today's video. If you haven't hit the thumbs up button already, go ahead and do that for me now, and let's dive into the 4-hour chart. So as we were pointing out before the GDP number came out, the ES structure is undoubtedly bullish, right? If you think about a range like this, we're above the range. If you think about a range like this, we're obviously firmly above the range. If you've been counting the highs and the lows, we've got higher highs finally, right? From here to here, we finally got a big, beautiful higher high. And from here to here, we've got a big, beautiful higher high. And obviously along the way, we've been putting in these really nice higher lows. So knowing that, the 4-hour trend is definitely up. There's no doubt about that. This segment of the chart now is up. That's a really ugly trend line. And you could start to call this a wedge. Absolutely, all you wedge traders. I'm not saying it's not a wedge, but for me, this is certainly, a nice uptrend that's budding here. Now, we're at the top. We're at the resistance portion of the trend channel. We're at the top. We're at this rejection point here. And if we look at the SPY daily time frame chart, We're at the daily 50 SMA on the top edge of the weekly expected move. Again, I covered all of this in much more detail in last night's video. If you didn't watch it, go back and watch it. You'll learn something. I promise you that. So would it not be reasonable for the market to pull back off of these highs? I think that the answer is yes. The market, it would be completely fine, completely acceptable for the market to pull back off of these highs and still remain in a 4-hour uptrend, right? Technically, to violate the uptrend, two things would need to happen. One of two things would need to happen, right? Number one, we would need to make a new aggressive lower low. So a lower low, if it were going to happen on the 4-hour structure at least, would have to be way down here underneath 3650. I don't think that that's on the table for today's session. I might eat my words. The market may crash, however many points that is, 200 points, but I don't think it's on the table for today's session. Hopefully you can agree with me from a reasonable perspective. That is off the table, right? We're not making a new lower low underneath this big pivot from here. So if that's not the case, then the next thing that the market would have to do to create a downtrend on the 4-hour chart would be to produce a lower high. Okay, well, we just came off of a higher high, so what would that mean? It'd mean a push lower, a rally, and then a turnaround for lower. And I don't think that that can happen over the course of one day to reverse the 4-hour trend. So, regardless of a pullback today or tomorrow, I'm not seeing the evidence that we can easily just flip-flop right back into a 4-hour downtrend. I'm seeing the evidence that a pullback here could actually produce a higher low from here to here to here to here, right? So on and so forth. Even if it were here at 3750, that's a nasty move on today's session. 100 points to the downside, nasty move. But, the market's been making these 100-point moves recently. So it's not off the table to go 100. I do think it's off the table to go 200. So a pullback on the 4-hour keeps us bullish. Let's take a look at the hourly now. What do we see on the hourly? Again, credit where credit is due. There was a solid reversal off of this target up at the top yesterday. We talked about it last night. And if we take out these lows, it would be reasonable that the market could see a pullback, right? That's not the end of the world, but we're coming off of a higher high. When you're coming off of a higher high, you can afford a higher low pullback. So what would the areas be to watch out for pullback? Hopefully you can see clear as day. This first gray box is of utmost importance because you've got this big pressure cooker top from here. That's going to be right around 3810, 3805, right? So about a 5-point range to the downside. That's a very, very shallow pullback, right? That might be achieved in like the first 15 minutes if we just see a straight up down move. But if we get here and we start to find support, okay, that's zone number one to start watching. Zone number two is this one right here, 3780. 3780. Why is that? Because that's the gap close area, right? That's the gap close area. The bottom is at least. I wouldn't focus so much on the top of that range. 3780 is probably the level I would focus on most. That's the gap close range from Monday, right? There's your Friday rally. Here's your Monday pullback gap fill reversal. We went right to it, supported, right? Sure, that lower wick does pierce a little bit lower, but we went right to it, supported, and then closed strong, right? Set up that beautiful breakout, which we talked about in last night's video. Again, please do me a favor. Just go back, watch last night's video. Again, I promise you that you'll learn something there. So 3780, support as like probably where you would want to see it go to remain optimally bullish in this market. It's still a shallow pullback, but it produces a nice hourly higher low. If we do go to 3740, it's not the end of the world. That's almost the equivalent of SPY 372. It's just the top of the daily balance, right? Top of the daily balance is here. That's got to be your kind of line in the sand, this general area. So pullbacks do seem likely based on the structure, based on what we know is taking place with Meta, based on what we know is kind of taking place with even just the ES and the structure here that we're coming into resistance. It would seem reasonable that a pullback can unfold on today's session, and those are some of the downside targets that we're seeing from the higher time frame. So with that being said, let's take a look at the 15-minute now and start looking for, tradable setups. We'll answer the 3 questions. So here we go. Question number 1, where are we opening in relationship to the prior day's range? Here's the high, here's the low. Notice that we're opening in range, all right? When we're opening in range, we've got question 1.5 as well. Where are we opening in relationship to the value area? Value area low is stacked down here. Value area high is stacked up here at the overnight high. We're opening in value, right? So the answer to question 1 and 1.5 is neutral, patience. No knee-jerk reaction to be had yet on the open, right? So patience on the open from question 1. Question 2, where are we opening in relationship to that overnight range? Again, there's your high, there's your low, almost the same exact levels. I would say we're opening towards the upper edge of the lower third, which is slightly more bearish than bullish, but it's not all that bearish because we're not opening smack on it. Now, again, this level, the overnight low, prior low of day, value area low, they're all basically stacked around the same spot, 38.30, or 38.35, 38.34, that rough area. If this breaks, we know that it will open the door for lower, right? Think about what happened on the 15-minute time frame yesterday. We set this high outside of the prior day's range, Tuesday's range. We fail back down into the range here, and then the dead cat bounce produces a lower high again inside of the range. So to me, yeah, it would be reasonable that off of a lower high, off of all these equal lows on the smaller time frames, we could see a pullback here that breaks this low, and that gets us into some of these zones down beneath, right? 3,800, 3,805. The next one after that was what? 3780s, right? So that's your downside play here in the ES. Question number 2, indicating again top of the lower third, slightly more bearish than bullish. Last but not least, question 3, what's the overnight inventory position? Extrapolate the settlement print. How much time was spent above? How much time was spent below? Notice that we're actually net long. We are net long here in the after hours. Actually, hang on. I think I grabbed the wrong bar there. I did. It's the green bar. That's the close. Sorry. So it's more split. It's more split. I thought my eyes were deceiving me. So how much time was spent above versus below? You can see it's a little bit more split, more of a balanced overnight session, especially with this upper wick neutralizing the short activity, but then fading, so neutralizing some of the long activity. It's something like 60%. I'd say 60% net long. Right, so no big shock and awe, no big knee-jerk reactions, no big inventory correction here on the open. It does seem as though patience will be your friend here on the open based on the answers to these 3 questions. Right, we've got patience here, we've got neutral and neutral. So overall, again, just to sum up some scenarios that I'll be watching for here on the open, I think I've been quite clear about this. If we breach the prior low of day and all of this support, yes, I'm willing to look for a short on the pullback into this gray bar. If we don't break this range, I would be at minimum neutral through here, and a breach of the overnight and the value area high level, that to me is a move, that sets up a move directly into the prior high of day again. I don't know that, you don't want to chase big new money longs there for swings, but break of this level, certainly bullish, right? That's a mechanical level as well. If we do something like this, it's right to the prior high of day. So rejection, rejection. If we take that out, I think that there are clearly, it would make sense to me that there would be stop losses stacked above this high, stacked above the overnight high. I think we go on a little bit of a stop run if we take that out. So just to sum it up, it's a balanced open. We're expecting a balanced range on the open. Whenever I draw on the ugly squiggly marks, you guys know what that means. It's patience on the open, right? So if we take out the top, watching for a rotation here, looking to play that possible break, or if the pullback is very obvious and we find very obvious higher low off of the VWAP, very obvious higher low, maybe it's off the prior top of balance. Maybe the balance looks something like this. We break higher low above it. Maybe there's a long here to get back to this and then watch for the break, right? That's your bull trade. But again, something that I would be completely open to, not against whatsoever, would be opening range, break down to here lower high. Taking this out opens the door to the gray bar. Okay, so 2 main areas of focus. Don't be overly attached to outcomes in this box. Above, we can look for longs to the prior high of day because there's a lot of bullish data points out there. Underneath the lows, we know that it's still bullish in the higher time frame perspectives, but we can afford a little bit of a pullback. So under the lows, look for the short into the gray bar here. All right, that's how I'm treating the open here this morning. Currently, it doesn't look like the market wants to decide, how it wants to respond to the GDP numbers, right? It's higher, it's lower, those upper wicks are there. Buyers and sellers can't really agree. I'm sure you're getting some of that push-pull between 75 basis points in December versus 50 basis points. Markets, economy rather, I should say, is doing fine. Jobs numbers are fine. Unemployment claims came in fine. So mixed bag, push-pull, but really just resolving neutral in the midpoint of the overnight session, which means patience on the open. So I've been pretty clear about what I'm expecting, what I'm waiting for here on the open. Let's see what the chat seems to think is going to take place on today's session. If you are a bull, let's go ahead and drop a situation like this for the buyers. So if you're going to drop a number 1 in the chat, it's got to be a higher low at some point today over the overnight high, breaking out of the value area to the upside. If you're a bear, it's got to, or excuse me, let's go neutral first. Let me not get ahead of myself. Neutral, chopping around in the value area. Drop us number 2, of course. That's the neutral outcome. And then here we go. Bears looking for the breakdown, lower high underneath, something that does this, right? That's a number 3. And if you've got no idea what's going to unfold on this morning's session, drop us a number 4 in the chat, and we'll go from there. I'll type up the official YouTube poll, mumble as I usually do, and we'll go and continue through the analysis. So start the poll. Let's type it up. What do you think? And we'll go 1, bullish. 2, neutral. 3, bearish. 4, no clue. All right, I'm going to put that out there into the world as the official YouTube poll. I'm going to scroll up to the top of the chat and see if we've got any pressing questions, comments, concerns. Someone mentioned the other day, just as some feedback, and I always welcome feedback. Is it distracting to ask the question here at this point in the stream? Would you prefer that I wait until the end of the stream to ask on the poll? I think they mentioned that it feels like we derail the analysis a little bit by taking a pause here and doing a poll. But let me know in the chat, like, give me some feedback. Do you guys like participating in the poll? I like hearing what you guys think personally. I think the timing here is fine. It's also a great time to take a little bit of a pause and digest some of the analysis that was said. So my thoughts are that keeping it here is fine. But if you guys find that it's too distracting and it actually doesn't really serve you well, then let me know in the chat and we can certainly bump it towards the end of the stream here. And maybe we'll try that out going forward. But let me know, and we can, of course, adjust on the fly. Let's see. Yeah, Jake C. made a comment earlier on in the chat saying the fact that the broad markets are just shrugging off bad earnings also seems a bit bullish, if you ask me. I hope you're not using sarcasm there. I don't think you are, but I would agree, right? The fact that, the meta earnings are not causing like a massive 50-point gap down in the ES, to me, that's bullish, right? It's just, as we saw from the CNBC headline, markets don't necessarily need tech going forward because we've got such strength in the XLV and the XLF, right? Healthcare and financials. What else? Any other questions, comments, concerns? There's a head and shoulders pattern developing on the 4-hour chart on the ES from Johnny D. I don't know if I'm aligned with that. I'll take a look at the 4-hour right after we address some of the poll results. We'll look at the 4-hour just to either confirm or deny that head and shoulders. I think it's much more of an uptrend. Where do the single prints end? We'll talk about single prints after the poll results as well. Abel, I'll make note of those 2 things, and then we'll go from there. So cool. Thank you guys for participating in the poll. Looks like some of the first responses are 3s from the Gecko as well as Ross. Stevie J with the 3, TB with the number 3. Then we jump into some 1s and 2s. Some more 3s from J Trades David P. Who else? Stargazers here with a number 2. Almost Davey Day Trader with a 2. Siege with a 1. A couple more mixed in 3s and 2s. I would say that it's a very mixed bag, right? Especially considering all these early responses as 3s. A lot of the early responses are 3s, but the official YouTube poll, the one people can click on, is a little bit more of a quantitative measure, right? Because we've got actual data saying that there's a 32% response rate for the bull side. So I'm not seeing that in the chat responses. It seems like we've got a really mixed bag of 1s, 2s, and 3s, like almost right across the board. I'm seeing lots of 3s and 2s, which doesn't make sense to me that the official YouTube poll would be the number 1. Okay, and there it goes. Just flipping bearish, 33% in the number 3 camp. Hopefully I'm not persuading someone to go one way or another. It just wasn't adding up in my head, which is why I commented on it. Peter G., I think you're wise, saying number 2, waiting on Apple after the bell. I do think that a lot of people will be waiting in limbo for Apple after the bell. Johnny with the green J is just asking, and it's the green profile J, because I know, seems like we've got a ton of Johnnies out there in the chat, but Johnny's asking, how long should you give the opening range to form? It really depends on your time frame. If you're a scalper, you probably want to watch for like a 5-minute opening range. If you're someone who's a little bit more patient, you might want to watch for a 15-minute opening range. It really depends on your own time frame. I can't tell you what's right for you. It's up to your trading psychology. If you don't have the patience to sit through a 15-minute opening range, maybe you watch the 5, right? That might not serve you well. The 5 might see more fake outs than the 15, But ultimately, that's, again, it's completely up to your own trading psychology. I wish there was a hard and fast rule, but there's just not. There's not. What else? Any other questions, comments, concerns? Some people are saying save it for the end of the stream. Some people are saying here is fine. End of the stream. After all the analysis, current timing, perfect timing, love the poll. Here, love it. Poll now is fine. Fine here, stick with the plan. Timing is fine. All right. All right. Seems like people are saying, a majority of people are saying keep it here. So, yeah, I guess we'll keep it. We'll take a poll on the poll. Yeah. All right, so we'll keep it here. We'll keep it here for now. But what I'll do is I'll shut down the poll on the ES, and I'll make a poll for the poll. And then what we'll do is maybe we'll experiment tomorrow and just see how it goes. All right. So what do you think about the poll? Keep it after ES 15 minute or end of the stream. All right, so I'll let that one go until the very end of today's show, and based on the results of that, I'll probably have my answer. But maybe tomorrow, just as an experiment, we will try it out towards the end of the stream, just to see how it works. But regardless, thank you guys for your responses. It is always appreciated. I really, again, I can't tell you how much I truly appreciate all of the interaction from the chat. It is always super cool to have a community here that is willing to give feedback. And hopefully we, at the end of the day, the idea is that we can collectively mold the stream into exactly what you guys want. And, that will keep everybody content and happy. So that's the ES breakdown. Thank you guys for participating. And we will continue into the NQs. For anybody who just tuned into the stream, the GDP numbers were fine. We actually beat the expectation. They check out as being bullish, which we got a little bit of a positive market response to. But remember in the back of your head that, if the economy is quote unquote fine and the jobs numbers, the unemployment claims came in fine as well, they were actually under expectation, then what does that imply that the Fed can do going forward, right? We can continue to see 75 basis point rate hikes. So, good news is sometimes bad news when it comes to the Fed. So that's the one thing that I'm struggling to wrap my head around. At the end of the day, we're going to trade price action, right? We're going to trade price action. So it doesn't really matter. All that matters is where we wound up inside of this kind of overnight range, or if we extended through it. And as of right now, the market didn't do anything impressive. We're just in the midpoint of the overnight range, right? So quick recap for anyone who just tuned in. Longs over value area high and the overnight high here. Shorts underneath the prior low of day, and that would be really reasonable. I don't think that it's too far-fetched to have a short bias underneath the prior low of day for a little bit of a pullback. All right, we've summed that up. We've hit home the ES hard enough. Let's take a look at the NQs. We're doing great on time this morning. Obviously, we started a little bit earlier, so we can probably look at some additional charts as we move through today's analysis and get closer to the bell. Here's the NQ on the 4-hour chart, right? Notice that the NQ, all it's done has neutralized the 4-hour trend. This is not a 4-hour uptrend. It's just not there yet in the NQ. And you'll actually notice on a very, very nuanced basis, we actually did form a lower high on the bar by bar count in yesterday's bar. Okay, so this one is already more bearish than bullish to me. And based on the fact that it does not have as heavy of a weighting in healthcare and financials, I would say that obviously it is more susceptible to downfall from the Meta earnings debacle. So if you're looking for shorts, probably look at the NQ. If you're looking for longs, probably look at the ES, right? Doesn't mean you can't short the ES on the breakdown of the prior low of day, but obviously where there's already relative weakness, it's probably favorable to do so in the tech department, okay? So that's your 4-hour chart. Let's take a look at the hourly, right? So from an hourly trend perspective, let's go ahead and draw in something that looks like this and something that looks like this. Is it the end of the world? Is the 1-hour time frame chart on the NQ signaling massive trend reversal? The market's going to break down and go to zero here? Absolutely not. We're just towards the lower third of the trend channel. So is this just a reasonable pullback off the top, finding a higher low in here? It certainly could be. We don't know for sure yet, but it could be. It could be, right? So I'm not willing to say that the hourly chart is all that bearish just yet. The 4-hour, don't get me wrong, is still neutral, but the hourly is still in an uptrend. And you can see that clear as day right on the screen here. Let's take a look at the 15-minute chart. So noting that we've got conflicting time frames in the NQ, you can certainly see in the pre-market, we've already made the move underneath the prior low of day zone, the value area low zone, the opening pullback zone. We made the move underneath. That took place right here. And on the GDP release, we are getting a little bit of lift, but it's just for a backtest. So the question to watch out for in the NQ, and I think that this will be a driving factor for the market today, would be if we remain or if we fall back down underneath the prior low of day, that's your big bear signal for the market. Right? If tech doesn't really want to get into gear and at least come back up into range, I think that your SPY might at least be neutral, especially if we see positive things out of the XLV and XLF. So SPY stays neutral. Let's do one of those. But in tech, if we're underneath the prior low of day here in the NQs, it would be reasonable to me that you could look for some pullback, a little bit of drawdown in the NQ, right? So I think this will be a market driver. This will be a deciding factor for the market. Do we accept back above the prior low of day, or do we immediately fall back down out of it, in which case you can have a slightly more bearish stance for the marketplace on today's session? This is not quite an inside bar. It's not quite an inside bar because we've got something like this. And I also just totally realized we didn't look at the single prints for Able, and we didn't look at, what was the other thing we literally just said we were going to look at? There's another thing we said we were going to look at. Let me scroll up. The head and shoulders on the 4-hour. Head and shoulders on the 4-hour ES. That was what we said. So we'll take a look after the Russell. We'll circle back for that one. I promise you that. All right. We've got the time to do it on today's session. Geez, that's for my own mental clarity, right? It's for me, the mental exercise of remembering something is actually important. That's an important thing to do for me. Otherwise, things fly in and out of my brain and you don't hold on to something. So memory, important to flex that muscle. So let's go back to the ES in just a moment. But anyways, for the NQ, sorry to sidebar there, had to do it. For the NQ, watch your prior low of day. That is your pivot point. Above, neutral, ES probably is bullish. Below, ES is probably neutral. NQ, you can probably look for the short underneath this on the break, retest, and go, right? Doesn't mean you can't short the ES. We talked about the reasonable setup there to the downside in the ES, but I'm just talking on a relative basis. This is kind of your, the pattern between the two, the divergence between the two. All right. So that's your NQ. Let's take a look at the Russell. And then we'll circle back for that ES, that pesky old ES, always making things tough. No, we love the ES. As you know, if you've been tuning into the channel, the ES is my little baby. It's my bread and butter. It's where I like to do almost all of my trading these days. Russell, what's going on in the rut? Russell 2000 small caps, incredibly bullish. I mean, look at the break out of the big balance range. Here's your original 4-day balance down here. From this action, well above that, way outside the midpoint of the range. Very, very bullish here. So can this afford a higher low pullback? Absolutely. What's the level? 1780 right here, right? Boom. Obviously, break, retest, and go. 1780 is your number. All right, so on any downside in small caps, 1780 is what you want to see. But based on what we're looking at here, let's go to the hourly and keep drilling down. I mean, it really doesn't look all that bearish. Big inverted hammer yesterday, right? If we think about what the daily bar would look like here, it's kind of something that looks like this, right? There's your inverted hammer. But we're opening right in the midpoint of that range. So not all that bearish just yet in the Russell. It would have to take out these lows, prior low of day, 1803, to get to your 1780. And that would be a reasonable pullback, right? So Russell, higher time frames, very bullish. Let's go to the 15, just see what we've got for pre-market indications. Holding firm on the GDP release. Remember that this obviously is not as heavy weighted on tech. It's much more of the small cap look. So, this is a good indication for the rut. It's a big show of strength and improvement in the smaller numbers out there. And the Russell is made up of smaller companies, right? Small caps. So decent look out of the Russell here. Again, inside the midpoint of the overnight session. So I think it's a patience play regardless. You can see there's the obvious long up and over the value area high, overnight high, because it's also this level right here. If we take that out, any shorts into the close probably have a stop here. Anyone who shorted that back test probably has a stop here. I think you get the run into the prior high of day. Again, not big new money longs. We're not looking for, 1850, 1875 in the rut. That's not what we're looking for. But just a quick little scalp on the upward direction and a breakdown of the prior low of day, not the value area low, not the overnight low, but the prior low of day here, because it's also this high as well, right? A breakdown of 1803 gets interesting into 1780 as we just saw on the higher time frames. Okay, so I think the play is very similar across most of the broad market. You're going to watch this range in the ES and the Russell. The NQ is obviously underneath already, so you're just watching to see how it accepts or doesn't accept in the prior day's range. Now, before I forget again, let's go to the ES and look at the 4-hour head and shoulders. If one's there, I don't think that there's one there. Unless you're talking about an inverted head and shoulders. Let's see who I think it was Johnny, right? Johnny with the green name and the green J. Johnny with the green name and the green J. I think you were the one who was discussing the head and shoulders. Let me know. Like, were you saying inverted head and shoulders? Because I could see the very rough argument for something that looks like this. That's possible, but a regular head and shoulders that would imply bearish, I'm not seeing any evidence of that whatsoever on the 4-hour structure. You know, if we do something like this, I mean, are you referring to this pattern here? That's already played out. That's already played out. So I'm not seeing a 4-hour head and shoulders. If you're saying inverted head and shoulders, I agree with you from this perspective. It's not the cleanest thing in the world. I would prefer to look at it as a sideways balance, right? Something that looks like this. But yeah, I would concede that yes, this could look like a inverted head and shoulders, right? Johnny D, I believe it was Johnny with the green name. I see you with an orange name, but the hourly head and shoulders, I don't think I'm seeing that either. I suppose something that looks like this maybe, you know, again, I wouldn't look at that as a head and shoulders. I would just say we've got a nasty inverted hammer, break these lows, flat lows, boom, we go lower, right? Sure, I guess in hindsight, it might look something like that, but I don't know. I wouldn't read into it as a pattern, so to speak. So anyways, that is that in terms of the head and shoulders look. And then the single prints for Able. Let's talk about single prints, right? Obviously, if we go to a 30-minute chart, we can find our single prints. And we'll zoom in here. Remember that on the Tuesday session breakout, we did form single prints here, right? So Tuesday's low is where they end ultimately. Tuesday's low is where the single prints end, which is conveniently, hey, would you look at that, right into our gray box here, around 38.03. All right, so let me show you that on the market profile, and then we'll continue through the sectors and moving through the analysis here. So here is Trade of 8. Someone else was asking where I trade futures. This is where I trade futures. So here we go. Boom, look at this. Boom, there's your single prints, right? So clear as day here on the market profile. Notice that you've got really thin structure through here. If we crack the prior low of day, if we crack the overnight low, that's where we look to rotate through the single prints and get down towards that 38.06, 38.05, the low, right? So single prints go from here down to here. So prior low of day, yesterday's low, 38.05. All right? Those are the single prints, and that is the thin structure that we have underneath us in the ES, and I would be watching that if we get a breakdown of the prior low of day. All of this sort of evidence comes together to sort of support the idea that, again, it would be very reasonable to see a breakdown of this low and get to here, you know, easily on the table based on everything that we've looked at so far in today's analysis. So hopefully we've answered all questions, comments, concerns of this morning stream thus far. We're doing fine on time. We've got 9:06. Let's blast through the sectors briefly, and then we'll jump into, probably what the people want to see, which of course are the core list of company charts. So energy gapping up, not a good look for the S&P 500. Keep that in the back of your mind. We want to see that a little bit more tame, not making the move towards all-time highs. XLV holding up beautifully inside the upper portion of the prior day session, above that upper wick. This is a bullish counterbalance to the bearishness of Meta, and this is one of the reasons why we've been saying that the S&P 500 is bullish until proven otherwise. XLP hanging in there sideways. Ideally, this one pulls back. Remember that this is D for defensive. We want to see it come in just a little bit and not lead the charge on a relative basis, especially when compared to the XLY. XLY is lagging slightly. It's not doing anything impressive in the pre-market. I would watch for a pullback in the XLY today. XLK is the tech sector, heaviest weighted component, equal high up here, reasonable for a pullback as well. It's not the end of the world based on the Meta earnings, right? You can see that we're opening in the sort of lower third of the prior day's range, but just watch your low of day. If we crack that low of day, first stop 123.50, next stop line in the sand 119.75. So I would say today's close will be important inside of the XLK. Obviously, Apple earnings after the bell, that should go without saying, but so far, okay, not the end of the world in the tech sector, keeping the S&P afloat. XLB Materials is lightweight. XLC is falling off of a cliff from the Facebook earnings. That shouldn't really come as much of a surprise. We're opening sort of down towards here underneath this, right? So this previous higher low has been violated. So not a good look in the XLC for communications. So overall, bearish data point for your S&P 500, all right? XLU. What's going on in utilities? Higher low double bottom, breaking out over that neckline. In the pre-market, we're sideways here. Decent, fine look, doesn't really concern me one way or another. Industrials are lightweight, not doing anything impressive. Towards the high of the inverted hammer, though, so more bullish than bearish. Real estate is lightweight as well, not doing anything impressive in the pre-market. And financials, last but not least, certainly a heavier weight sector. Let's look at it for just a moment here. Inside the midpoint of the inverted hammer, again, more of a neutral look at worst for the market. This is not yet bearish here in the XLF. If we break down underneath the lows, there might be a short for today's session, but still a high probability of a higher low being put in, ideally around 3250. So another bullish supporting piece of evidence for the S&P 500, right? That's what I've got for you in a quick sector rundown. Let's do the cash equivalent indexes now, and then we'll move into the core list of companies. S&P 500, again, just watch your prior low of day, 381.50. As long as we're above 381.50, neutral, breakout over the overnight high, 384.50, gets you to your prior high of day. Remember that we're sitting right at the top of the weekly expected move and the daily 50 SMA. So be cautious of longs, but a scalp to the upside could be had over 384.50. Downside move, obviously first target, as we discussed last night, 378.50. Let's take a look at the QQQ and look for our equivalents here in terms of important structure. Obviously, you've got your prior low of day, which we are struggling with as of right now. Acceptance above, be a little bit more neutral, probably only looking for the bullish outcome over the overnight high. 279.50, right? You can see that here, 279.50 as well, top of the original balance. If we can get back above that, that does strike me as a check mark for the bulls. Anything that's just chopping around in here is neutral. And again, anything that rolls over can't really resolve this 277.50-ish zone, prior low of day. That's a bearish outcome, right? Bearish outcome, no acceptance. Inverted hammer, technically a lower high. That's bearish, right? Failing this level, failing to accept in the prior day's range, rejecting off the low of day, look for shorts in that situation, and you're probably targeting here 273.25. That's the QQQ. IWM Russell 2000 and small caps are up next. Last but certainly not least, look at it beautifully hanging out above the top of the weekly expected move, not really giving a care in the world about the inverted hammer that printed yesterday. So again, quick scalp, maybe over this 180.75. Again, I don't trade this as an actual index to trade. It's something to watch as a market indicator. Over 180.75, bullish sentiment for the market. Back down into the weekly expected range, neutral. It's not bearish, it's just neutral back down in the expected range. Okay, so that's the broad market. Excuse me. Let's take a look. We know, Joe, the Meta is a part of the XLC, which is why the XLC communication sector is down so much. I was saying that there might be some carry forward, some trickle over from the Meta earnings into other tech companies. And maybe the XLK would have a sympathy move, but it's not the case. That's what we were getting at. Anyways, Apple's up first on the chopping block. What do we see here? Obviously, this, can't point to that one enough. Thursday after the close, that's today, after the close, 4:15, 4 o'clock. I don't know exactly what time it's going to be. What does it say here? 4 o'clock, right on the nose. As soon as the bell closes, that's when we're going to get Apple earnings, right? So be prepared for that. I would say that Apple is probably going to hang in limbo. Implied volatility in the options chain will be pumped up. It will be pretty difficult to trade this without paying through the nose for options premiums, and I would not carry any positions overnight through it, right? You might think that you're going to be a genius and short Apple because you saw Meta fell off of an absolute cliff. I would say you're trading with hindsight bias, recency bias, and it's not going to work well one of these times. You'll blow up the account, you'll do something silly. So to me, it's just best to avoid these things, especially if you're trading near duration expiration options. So certainly don't carry anything that expires on Friday through this earnings release after the close in Apple. It's more of a patience play here. We are getting some price acceptance. I will say there's a little bit more of a bearish slant underneath this 148.75. Notice that would have been your ideal bull flag range. So a couple of outcomes here for Apple early on if you are so inclined to trade it. A quick pop above with price acceptance here. That to me would be a little bit more bullish, at least putting in the possibility of a flag here. Price acceptance underneath 148.75. I think we're in a tricky spot here, noting that it's not really a clean short because we've got support just underneath us as well at 146.50 from the top of this range here. Right? So will it be more of a break and retest like this? It's possible. So Apple's a little bit tricky, and especially with the earnings thing being thrown in after the bell, to me, it's just saying like, hey, avoid me today. It's not going to be the end of the world to not trade Apple for one day out of the month, right? Next up is Netflix. What's going on in Netflix? Continuing its ascent to the upside here, holding up fine in the bull flag consolidation. To me, you're just watching for continuation. Any holds of 295.65, right? Beautiful. Look for this bull flag to, bull flag to break out and continue to fill the gap overhead, right? So Netflix is just watching for continuation. Try to pick a decent entry with tight risk reward where you've got a clear stop loss and then go from there. All right, so that's Netflix. Tesla. Everybody's talking about Tesla here on the move up and out of this balance area, and I think it's worth talking about, right? We are slated to be opening well above 222.25, right? You can see in the pre-market that this pullback, the afternoon pullback here, the upper wick, did support around this area, around the prior high as well. So more bullish than bearish, certainly inside of Tesla, looking to see if we can get some continued breakout of this range. A range double technically takes us up towards 240, just shy of this breakdown point around 241. I don't necessarily know that, pretty tough. Like, it would have to be a clean intraday pattern. I think that there is some room to run to the upside. So I would watch your prior high of day. Any setups that happen like this are probably tradable. So number one, opening range or pullback that then recaptures the opening print and moves through the prior high of day. Probably a long setup to at least get to 234.13, then monitor for continuation. If that doesn't happen and it's just immediately higher, then that's going to be your level to play off of 234.13. Right? That's not an unreasonable range for Tesla to sort of run up into before finding a pullback. So a pullback off of that respects VWAP or something like that. Higher low above VWAP, look to buy that pullback and then trade through the level. If it goes through it first, higher low above, right? That's also on the table. So I would favor bullish outcomes here in Tesla based on breaking out of this range and a range double taking us closer to that 241 target. It's all about this pesky 234.13 coming from the 2-day lows here. All right. And we came just shy of it yesterday before rolling over. So that's another reason why it's, obviously your risk reward here is limited. So it's got to be a clean setup or a break up and over this for continuation above. So Tesla, it does look tradable on the bull side, but be careful about the setup. Make sure you've got tight risk reward, knowing that you've got a limited overhead target, just a scratch higher than the prior high of day, right? That's Tesla. Google up next. Bearish, right? No doubt about that one. Look at this nasty gap down. At first, we did get some inventory correction as we warned about, but it was very short-lived. Really went right to this like pre-market structure, rolled over, and it was bearish into the remainder of the day. So hopefully you avoided some shorts early on in the day. If you caught one for the afternoon, then congratulations. Fantastic. Kudos to you. Look at the beautiful inverted hammer that happened right around this area of resistance in the pre-market. I'm not saying, I'll just tell you, I didn't take that trade, right? But for anyone who is watching this carefully, you could have seen that and possibly taken action from it. So again, if you did take a short trade in Google, congratulations. Hopefully it was timed well enough and you didn't just smack it short on the open and get kind of crushed on that initial pop. But regardless, what are we doing here this morning? We're spending time in the pre-market underneath the bottom of the daily balance. So what I'm trying to point out here is that this is bearish, right? There's no buy setup really in Google. As long as we're underneath 96.25, I think the bears are in control. Bears are in control down here. Look for continuation to the downside. You've got all of this now overhead supply, fake move to the upside, rejected off the 50 SMA. A lot of disappointed longs out there who are either folding or just not interested, noting that we had to wait through all of this, finally got some signs of hope, then all of that was crushed. All of that was crushed, and we're getting acceptance lower in the pre-market. So I don't really see a reason to be overly bullish in Google. The only time to be bullish is probably looking for this gap to close overhead, and that would require popping back above 96.25, which would be technically the exact opposite. So look above and fail, bottom of the range, right? What about a look below and fail, top of the range, right? So I don't think it's just immediately long over 96.25, but certainly interested in this gap if we start to show signs of a look below and fail. So that's kind of the patience play here inside of Google. Next up is Meta, absolute atrocity, coming into our lowest level on the chart that we've got mapped out. 98 was the last thing that we had drawn in, preparing for some of these downside moves. And, we're right there, basically. We're right there around this 98.66. Kind of funny how that works, but I honestly, guys, I'm not even interested in trading Meta on the open. I just don't think the risk reward is worth it whatsoever. It doesn't seem worth it to me to try to find a long down here to correct some of this inventory when we could just watch for an easier setup, more tradable setup in something like SPY the Qs or even Tesla, for example. I'd prefer to trade Tesla over Meta here. So I know everybody probably wants the home run trade, the big slam dunk on Meta, something to do here with this nasty, massive gap down. But I think you're just going to find more headache than profit in a setup that looks like this. It's such a large gap. It's such a large gap that, again, you're going to get two conflicting sides of the trade. You're going to get those who think, oh, look at this, Meta's on sale. We've got to buy this thing down here. It's huge markdown, right? Huge markdown. We're going to see if we can get some lift. And then you're also going to get the crowd who's long from up here and says, you know what? I'm sick of holding this thing. I'm going to bail on it. And we got to get out of here. And then they're going to start selling, right? So two conflicting sides of the trade. Maybe we just go sideways down here. I think it's going to be more of a headache than anything else. I don't really think it's worth your time this morning. So we'll leave it at that. We just know that the chart is nasty and continue along. What's going on in NVIDIA? NVIDIA, anything interesting? Pre-market boosting higher. Reason being, I think in the Meta earnings report, they mentioned obviously some pretty significant spend on metaverse, and graphics will be a huge component of the metaverse, right? You've got to have the infrastructure, the actual hardware to support these types of things. And Meta is not a hardware company, right? They're a software company. So the hardware needs to support this big push to the metaverse. Whether you agree with that or not is a different story, but nonetheless, you can see NVIDIA is seen to be a premier chip maker. Obviously, that's where some money is going to go. So their stock is seeing a bump based on that information. Now, what that looks like from the daily perspective is a breakout of the 2-day range. So bullish here inside of NVIDIA, no doubt about that one. If we do see a pullback, you should be watching for buyable pullbacks as long as we're above 133.50, right? 133.50. So NVIDIA above 133.50 looks good and checks out for pullbacks here. If it just continues to the upside, your target is 139.50, which is getting limited on overhead. We're kind of in between ranges right now from this perspective, right? So make sure that if you do take this trade here, you've got tight risk underneath a low of day somehow. Maybe it's a quick opening 5-minute range that then breaks out. Stop can go low of day. So just make sure you're protected if you do decide to take this trade without a pullback first with a reasonable stop loss. Okay, because we're in the midpoint between the two targets. It's much easier to take a long here with a stop somewhere down here. If your target's still way up there, you can see that risk reward is clearly better than 3-1, 4-1, 5-1, whatever. But being in the midpoint, now it's kind of, it's a little bit trickier, right? So the intraday setup has to be there in NVIDIA. Tight stop under low of day. Hopefully it's an early morning quick shallow pullback or something. Then boom, continuation. If it does fade to close the gap all the way, of course I would be watching here, 133.50 for gap fill reversal. Be on the lookout for hammer candles. Be on the lookout for double bottoms, inverted head and shoulders, right? Any patterns or reversals here, certainly interesting inside of NVIDIA for more of an upswing back in the, obviously, upward direction. So that's NVIDIA. Be mindful of your risk reward. Microsoft, what's going on here? Certainly more of a bearish look after the earnings have sort of, panned out from yesterday. So just like Google, this one was not as cleanly off of the overnight structure. I suppose, again, there's your inverted hammer or whatever. But what this is more of an indication to me is a big failure to move back into this range, right? Look at this upper wick here, completely rejecting that daily balance range. Close weak underneath, right back down at the open. Again, this is more of a candidate for a short underneath 230 for continuation to the downside, as opposed to looking for big reversals in the upward direction. So I'm not seeing it here inside of Microsoft. Just like Google, carry forward the same bias, a little bit more of a short look as opposed to a long look. All right, so 230, just watch this mechanical level. You can see clear as day, you've got low, 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 low. It is a flush point with lower highs coming into it. High, lower high, lower high. Not really getting in gear with the whole GDP announcement, right? So 230 breakdown, certainly interesting for downside. Last but not least, the mini beast, we've got Amazon, and we're doing fine on time. We've got 9:22 on the clock. So what we'll do is we'll just take a couple of requests, and then I've got a special announcement at the end of the video for you to tune into. So Amazon, what's going on with Amazon? Earnings after the close, just like Apple, today might just be a day of chop sideways, holding the breath. And it also makes sense to take it easy as well because we're in the midpoint of this overall range, right? When you're in the midpoint of range, you don't really have an edge. Your edge is at the top or the bottom for breakout, breakdown, or mean reversion and mean reversion. So knowing that about Amazon, I'm not really all that impressed with where it's trading. It is technically failing to resolve or trying to resolve the prior low of day. It is an inverted hammer there. We looked above the range. So yes, I would have more of a short bias and look for at least 112.50, but with earnings around the corner, literally after the close at what time here? 4:30, maybe just take it easy for a second inside of Amazon and look for other opportunities. I think today is the day where if you're going to take it easy, today is that day, right? Tuesday, great day for momentum trades in the upward direction, even yesterday as well before the mid-afternoon reversal. But I think today is kind of the day to say, okay, we got some pretty solid moves earlier this week. We're coming into big earnings candidates, namely Apple as well. It wouldn't be unreasonable to just say, all right, let's chill out for a day, right? So Amazon wouldn't be overly aggressive, but probably have more of a short bias than a long bias. All right, everybody's asking about AM Dizzle, of course, gapping up like NVIDIA based on the announcement from Meta. Just like NVIDIA, there's your 2-day range, but more importantly in AMD, the 2-day range was already the beginning of a breakout from this balance area here. So to me, and this actually isn't gapping up as aggressively, I would say. Obviously we're here. So NVIDIA looks like it's probably going to be awarded more of the contracts just based on how, the two are unfolding based on that announcement. But regardless, just watch this high, right? Watch this high zone around 61.80, right? 5-minute breakout patterns over 61.80. Interesting for upside. You've got a 2-day range that's already bullish, breaking out of the major range here on the daily. Look for some continuation into the bottom of this, right? So if I had to mark up AMD's daily chart, I'll show you how I would actually do it. Let's actually do it here. Let's go hourly, and we'll go through the whole deal, right? So this is your daily range. There's your 2-day range, and where's your target, right? Probably right up here through that thin structure. So here we go. That's the hourly, that's the daily. Hopefully that makes sense as well. I just wanted to be a little bit more accurate with a smaller time frame. Let's now go to a 5-minute chart, and I'll walk you through exactly what I would want to see, right? This is kind of it. We're going to be opening up somewhere up here, right? So it's got to be a couple of things. Number one, compression that turns into an ascending triangle, break, good to go. There's your breakout level. Look to target here. Stop goes underneath whatever low of the breakout bar forms. Next one, break. Okay, now it's all about a higher low above. Try to buy a move into the VWAP if we're above that point, right? So a hammer off of VWAP, interesting. Stop underneath the VWAP, look for higher. Boom, there's your target, right? Anything that does this, not as interested. If we're underneath the opening print of AMD, not as interested. We're still stuck in this 2-day range, right? So falling off of this and being underneath the opening print, not getting any acceptance over 61.89, not really all that interested in the long. So those are 3 different scenarios for you in AMD, and 2 of them are tradable, all right? So we've got about 4 minutes until the bell. Now, what I want you to do, Travis will look at Lucid because you've got a green name. LCID, there we go. Oops, if I could spell. LCID. If I could spell, we'd look at Lucid, but apparently I can't spell. What we'll do is I've got I've got an announcement for you that's not a cough, I promise. And we'll cover that right after Lucid. So Lucid inverted hammer yesterday, kind of at this 50 SMA. I would look for a downside move underneath here, right? So Lucid to me is more of a candidate. Let's throw on the pre-market actually. Let's go 30. I don't want this to reset back to the SPY chart. It's annoying how Thinkorswim does that, but here we go. So Lucid, I would watch for a look above and fail on this range, right? So here's a daily range. Inverted hammer yesterday. The short is back down underneath this. So it's even a little bit lower than the prior low of day, rotates back there. We're in a very aggressive daily downtrend. This one has not really made the move to reverse that yet. I would want to see it above here for more of a look that is like this, right? That kind of reverses the daily trend. But as of right now, this could clearly be just a lower high, right? So Lucid is a short back down into this range for a look above and fail. That's what I would say about Lucid. In the pre-market, we're kind of just hanging in there sideways in this range. So I don't think that there's an actionable item yet. in Lucid, but that would be my first watch. It's kind of a short underneath this zone here, 1350, to rotate down towards these lows here. I would not be married to a long in Lucid, just based on the daily trend. All right, announcement time. If you don't know who Peter Resnicek is one of the founders of ShadowTrader.net. He is one of my mentors in all things trading. If you haven't heard his name, I really would encourage you guys to take a look at who he is, what he does. He does have a paid service. I'm not an affiliate of his service. I've never signed up for his service. I want to be completely transparent about that, but I do think he offers extremely useful and valuable trading advice. He's a mentor to me. Whether or not he knows it is a completely different story. He is doing a live show this morning on Thinkorswim. The way that you access this show is by going to the chat rooms bar up here in the top right-hand corner of the screen. All right? Top right-hand corner of Thinkorswim, you've got a little chat rooms button. When you click on that, you are presented with something that looks like this. And what you want to do is navigate to the Shadow Trader room right here. I mean, look, guys, it speaks for itself. Peter is live right now in his room. He's got 1,819 people watching. That's more people than we have on the show right now, but look at it compared to all the other users in other Thinkorswim rooms, right? No one tunes into anything else. Right, it's all about the Shadow Trader Lounge here in Thinkorswim. So I would encourage you, because the bell's about to ring in a minute, to go ahead and go hang out with Peter for the remainder of today's session. Okay? Big influence on my own trading, and he, I think he explains the market with extreme clarity. Hopefully I've learned a thing or two, and I can pass that along to you. But please, go check out his show. He will be live for, I believe, the entirety of the day. With that being said, we've got about 30 seconds to go. We'll give you the first 5 minutes. Because we are, of course, opening in a reasonable range here. So let's check out the ES on the first 5-minute bar, and then, again, go hang out with Peter for the rest of the day here. Let's go to a 5-minute chart. Oops, sorry, we want 15. Apologies. 15-minute chart. And here we go, off to the races in 10 seconds. 10 seconds, and we're off to the races. If you are going to tune out, please go ahead and hit the thumbs up button on your way out. I would greatly appreciate it. It's a small way you can show a little support. And ding, 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 there is the bell. We are off to the races, opening in balance here. We know that there are more bullish data points than bearish data points, but willing to be flexible and wait here on this balance range, right? We're inside of the overnight range. For anyone who is asking about the link, I don't have a link to Peter's Thinkorswim show. I don't think you can share this as a link. You need a Thinkorswim account, and you need to jump into the chat room to talk, well, you can't talk. It's a one-sided show, right? He's a presenter, kind of like what happens here on YouTube with our show. So anyways, ES on the open. Let's take a look at our internals here. 3 and 1. So definitely more bullish on the NYSE, which shouldn't, again, come as much of a surprise considering what goes on in the XLF and XLV. ES is kind of hanging out in limbo, not really doing anything too impressive. The tempo does seem to be slow here on the morning's open. Tempo is quite slow. The ticks opened around 1,000. It's a bullish indication, but we would expect them to come in a little bit. It's all about whether or not we support. Wow, mouse is really laggy. It's all about whether or not we support around the 0 line if the ticks do pull in. And then the advanced decline line moves like a snail, but opening definitely more in the bullish territory up towards 1,400. So bullish data points are there. Opening range, again, breaks of the overnight high get interesting, but patience, wait, opening range, all of those things should be on your top of mind as we're sort of watching this open unfold. Let's take a look at Meta just to see if we can get any laughs out of this chart here. Looks like it was a little higher. Now it's a little bit lower. And nothing crazy happening here. Let's turn off. Let's go to a 5-minute chart. And we'll take a look at Meta again. Let's try that one more time. Oops, we want Meta. Yeah, I mean, this is exactly kind of like the activity you want to avoid. Little pop higher. Now it's a move lower. Whether or not it falls apart, totally different story, but pretty tough to pull off a new money short here. You could, technically you could go short, stop over high of day. To me, it's just not worth it. It's just not worth it. Wow, is Thinkorswim lagging for anybody who's trading elsewise? It does seem like the platform is lagging quite a bit here. Hopefully that's not just on my end. But let's keep it on the quad here for a moment. ES continuing to push higher, it looks. So definitely more of a bullish slant than a bearish slant. But again, patience is your friend. We could easily just turn around off the value area high, overnight high. Patience, patience, patience. Janet, is that a yes to Thinkorswim is lagging? Is that a yes to Thinkorswim? Yeah, okay. So it's not just me. I think, whenever the market experiences a real big move from something, wow, this mouse is almost unbearable. Yeah, with the volatility on Meta, I think it's probably struggling to keep up with kind of things that are going on there. So that doesn't strike me as all that surprising. Whenever you get big price movements, typically Thinkorswim does tend to lag. I wish that there was a better solution, but it still is a premier platform for all charting analysis, and I would even say execution at times. Don't get me wrong. I think Interactive Brokers is probably better from the execution standpoint in terms of filling market orders, but Thinkorswim as a complete and total package, I would say probably takes the cake. Interactive Brokers doesn't have it going on from a charting perspective, but regardless, notice that the ES, if I could draw here without the lag, it did pull in a little bit. We formed a little bit of an upper wick, and now we're moving back higher. We've got the first almost 4 minutes now under our belt, and we're just kind of going sideways. Yeah, I definitely know the collect garbage trick. Let's try that one out. For those of you who don't know, if you go to Help, System, Collect Garbage, typically this does help a little bit. You can press Collect Garbage, and you'll notice usually that your free memory picks up a bit. It's not gonna dramatically improve everything, especially if it's more of a server side issue from Thinkorswim, but it will help a little bit. So thank you for the reminder there, Dave. Do appreciate that as always. Austin, the gentleman's name is Peter Resnicek. Peter Resnicek. Just type in shadowtrader.net and you can find him. He's live on their Squawk Box currently, which I will be tuning into, you better believe, as soon as I'm off the air here with you guys. So currently on the first 5 minutes, we're not seeing anything all that impressive. The ES is stuck in kind of this little opening range. So as we sort of, again, draw in those ugly squiggly lines in the pre-market, that's exactly what this is, right? The ugly squiggly lines go out into the future, but that's just their abstract representation. Really, what's happening here in this 15-minute bar is starting to become an opening range. Now, we've only been 5 minutes into the day, so you'd need to look at like a 1 minute chart to see this. Let's actually just do that as an exercise together. Wow. Really tough look on Thinkorswim. That was quite a choppy thing. So look, there's your 1 minute opening range, right? If you were someone who's a scalper on the 1 minute chart, this is what you're watching. I'm not a 1 minute scalper, right? So I'm going to go back to the 15-minute chart, but you get the sense that this is like Russian nesting dolls, right? Russian nesting dolls. They all stack inside of one another, and that's what this upper wick continuously forming and not forming would represent. So patience is still the play. Long over the top, short underneath the low. It's possible for the short under the low, but for me, as you guys heard from the live stream and my plan this morning, really want to see the breakdown of the prior low of day to start looking for more aggressive shorts and not get too caught up in this range here of the overnight. All right, let's do a quick filter through some of the charts again. So look at that, just like that. Meta's back higher. We're gonna get off of this screen because it does seem to be the issue with the lag. Apple, not really accepting in the prior day's range, more bearish than bullish here. Netflix, how are we doing on this one? Wow, tough look, tough lag this morning. Not quite a buy yet. You would want to see some sort of reversal pattern happening here off the 295.67. So be on the lookout for hammers if they want to print, double bottoms if they want to print, 295.65. That's your level. That's the ideal pullback. Tesla, big upper wick, right? So this is kind of what I was scared of in Tesla, was the move into that target. Wow, the lag is real. The lag is real. All right, we're going to hop off the stream here very shortly just so I can hopefully resolve that and maybe execute a trade reasonably. But this is kind of what I was afraid of, right? The move into that target, no reasonable pullback, gets a little bit tricky to trade, right? So I'm sure you could hear the hesitation in my voice as we were looking at that. I'm not seeing the obvious trade setup yet here in Tesla. I would probably want to watch at this point for a deeper pullback into 222.25 and then reverse out of that, right? So that's a possible situation in Tesla. This opening setup doesn't really give us all that much to trade off of. Google, bearish, as we pointed out. Meta, we already looked at. We're going to get away from that chart. NVIDIA pulling back to close the gap. I would watch. So NVIDIA is a top watch for a gap fill reversal, 133.50. If we come all the way into it, print a hammer candle, any sort of bottoming patterns down here, definitely interested in NVIDIA on the 133.50 gap fill reversal. Last but not least, but Microsoft is up next. Bearish, as we pointed out, starting to make that breach down underneath 230. You could watch for downside continuation here in Microsoft. And Amazon, last but not least, the mini beast, did see the full rotation to the bottom of the range. Again, with earnings after the close, probably not something too interested in trading in for now. It's probably Microsoft downside, as well as Tesla possible upside off of this deeper pullback. Or, no, NVIDIA. I would prefer NVIDIA long, honestly. NVIDIA long off this pullback and Microsoft downside underneath 230, continuing, okay? So that's what I've got for you in the pre-market live stream. I do appreciate you guys tuning in. Just a quick recap of the ES here. We've still got divergent internals. The breadths here on the NYSE are much stronger than the NASDAQ, but really not at a 3-to-1 read that's all that impressive. Advanced decliners hanging out around 1,400. Ticks are very bullish, staying above zero, which of course would give you more of a optimistic look for upside playing out as opposed to downside. But your ES stuck in what looks like the opening range, going sideways, not doing a whole lot. Remember, patience is your friend. Wait for the ES to give you a direction, and then we can trade into some of the other companies. NVIDIA gap fill reversal and Microsoft looking for some downside. With that, I'm going to tune out and tune in to Peter Resnicek over in his Shadow Trader room on Thinkorswim. I would encourage you all to do the same. He will probably drop some pretty decent insights. Usually he'll give out some free trades. He does much more like swing trade, spread type trading. Back ratios, broken wing butterflies. So if you're into advanced option spreads, he's your guy. I'll be there hanging out, listening. If you want to join me, you can do so on your Thinkorswim platform as well. With that being said, thank you all for tuning in. Hope to see you in the Discord, and I wish you all a great trading day.